The end of 2019 saw change at the European Central Bank, but will that lead to a change in policy? President Christine Lagarde used her first ECB news conference to signal the central bank will likely remain on hold next year while it completes its first strategic review in over 15 years. Kit Juckes, Chief FX Strategist at Societe Generale, is still with us. Kit, a strategic review at the ECB. What should be the purpose of that for you?
I'm actually genuinely not quite sure in the sense of, what it will be is looking at, should we change the inflation target? What can we do differently? How do we change our role? How do we define what we do? If I don't know, the analogy is somewhat of a sheriff with no guns and no ammunition talking about what his job should be. The answer is get a new gun and new ammunition or something. So I think that the challenge is they have very little they can do. So what are they going to do in a review that changes that? But I think that the need is to really tie monetary and fiscal policy together in terms of both being usable at the same time, and I'm not sure the review covers that.
And we'll come to the fiscal side in just a moment. I just wanted to show you this chart because one of my colleagues pointed it out. Five-year inflation, much beloved of Mario Draghi. We wait to find out whether it is much beloved of Christine Lagarde as well. But European inflation expectations, essentially. Do we detect higher inflation expectations at the right-hand side of that chart, Kit, or would that be reading too much into what's been a fairly range-bound path for the second half of 2019?
I'm going to say we reflect a squiggly line that's been going sideways for quite a long time now from that chart. The good news is the big decline is over. It could turn higher. There's been, for example, tightness in the German labour market with some higher wage numbers, but as the economic cycle slows, I would be amazed if we didn't see, for example, in Germany now, that the unemployment rate doesn't go up as much as you think, but that there's more and more willingness to have people work reduced hours, and there's a much less aggressive wage demand from the unions at the beginning of next year. In other words, the sort of things that feed into inflation in the European economy, which is it sort of protects itself from the extremes of the economic cycle, but the effects of this year's trade weakness will be felt in the labour market next year in a pretty big way. How do you get significant inflation against that backdrop, really? So if I had to trade it, I would be selling the five-year inflation rate.
Right. We were just hearing from Danny about the travails at BMW, but really that whole sector is troubled, isn't it? Which doesn't help the German exporters. Let me ask you about the euro, though, Kit, as we don't have all that long with you, and this being your area of expertise. Let's ask about the euro. I saw that JP Morgan is saying they see gains in the euro in 2020. They say it's relatively cheap. There's an element of global reflation, and they look at some looser fiscal policy. What supports the euro in 2020?
What supports it is that it's like an elastic that's pulled as taut as it can possibly get. Getting the euro down means more of the same news, but you can get it down really slowly. In real terms, if you do euro-dollar and adjust it for inflation, we're right down where we were in 2001, 2002. So what supports it is the strength of the US economy pulling the dollar up, and then trying to, any negative news. But also, European sentiment's about as bad as it can get, so you can't pull down much further, rates can't go down. So you have to get the euro down on the US economy doing even better than people expect. Frankly, what's going to send the euro up is that there's too much optimism, particularly in the United States, about how much the US economy can grow next year. But we could mess around in this time. This is going to be the euro's smallest annual range by miles, unless we go nuts
in 2020.
The next week. Yes, 2019.
Oh, 2019. Right.
We'd have to go crazy next week to change that.
It's a small range that we've seen so far. Kit, thanks very much.